Hatendi-Matika, head of retail investment at Absa Wealth and Investment, joins us now as we unpack that data a little bit. First time beyond 5% in around 10 months, a little worrisome.
So the last time we saw it at 5.1 was September 2017, as you said. And the big factors here were housing and utilities and petrol. So those were the two glaringly obvious things that were ticking up.
Yeah. Should we be concerned at this stage? We've gotten sort of used to the 4.6, 4.8, 4.5, even midpoint of that target band. Should we be concerned that now it's breached 5%?
A little bit of concern. So we definitely won't see the 4 digits anymore. We're going up now from this point, and we're definitely going to see higher food prices. So food was contained for a very long time, and fears of a potential drought are also looming. So we will start to see an uptick in that number.
Yeah. The drought in itself, however, did dissipate somewhat.
Yes.
And that did obviously help the inflation price, because we saw that come down significantly, but everything else is going up. How far along are we going to get prices moving to 6%? Or at what stage do we get them moving to around 6%, making us very, very worried at that stage?
So if we start off with the drought, so there's potential for El Nino towards the end of this year. So that would start new concerns when it comes to food. And then if we look at petrol, so petrol and oil are the two things that we're most concerned about, and the impact of the rand on the petrol price. So the pump price will definitely feed into the transport, and that will push inflation up significantly. So we need to look out for that volatility in the rand and also volatility in the oil price.
Yeah, that affects the South African Reserve Bank. Next month, around the 22nd or so of September, they then meet and decide on South Africa's interest rates. Does this, let's say, how big a part does this play in their decision next month?
So they always talk about everything counts, and they're data-driven, but this particular print is not as big as the outlook. So what we would look out for in the next meeting is to hear their rand update, so to see how they're seeing the rand playing out. And with all the volatility we've seen globally, that rand outlook is becoming harder and harder to anticipate.
Yeah, especially with all the things that are happening, whether it be Turkey, who, yes, might be on holiday for now, but next week come back online, and that could still see a little bit of weakness in the rand. That 5.1 figure becomes almost a starting point now with the 18-month outlook for the South African Reserve Bank when it comes to inflation outlook. It's a really bad place to start, right? Because the pressures just continue to pile up. And does that affect how much they increase interest rates by? And are we even in a hiking cycle now? Could one think that we're headed towards that?
So I like the fact that they've stopped talking about cycles. So they talk about they could hike or cut depending on how
it looks. Do you not lose credibility that way?
Well, I think they're gaining credibility because they've shown that they don't just act. So they do look at everything, and they look at all the data prints. So what we're seeing is that it actually doesn't breach the 6% mark up until 2020. So while it's ticking up, we still think it's contained, barring any significant blowouts globally.
So no hike in interest rates then, we're saying?
Not in the short to medium term.
Okay. Yes. All right. Let's talk about growth. That adds a lot of pressure to their mandate. It may not be their initial mandate, but surely they're cognizant of South Africa's growth figure and don't want to hike interest rates in order to stifle that growth.
Absolutely. And there was a bit of panic and concern when they downgraded their expectations from 1.7 to 1.2 in the last meeting. But I think that was prudent because we've seen that the data has been disappointing and quite soft. So we are seeing the data that we can track coming out softer than expected. And I think in the next few weeks, we get a better picture of what Q2 GDP will look like. And that's before the meeting. So at least they'll have a bit of sight in terms of that.
Absa's expectations for growth this year now?
So we're still in the 1.5 region.
That's a bit optimistic, is it not?
Yeah, but I think there are pockets of excellence. So while things are really bad, we do see areas where things can improve. So especially with the base effects. So there are places where we anticipate to see a bit of an uptick, especially in the Q2 data, hopefully. Yeah,
no better base effect than zero in itself as well, which is exactly what we saw, negative 2.2 as well with regards to growth rate in South Africa in the first quarter. Tsitsi Hatendi-Matika, thank you so much for your time. Head of Retail Investment at Absa Wealth and Investment. It was a green day on the markets, even the rand performing better, ticking up at least around 1%.